Fed stopped hiking interest rates, bratans. I want to show you exactly historically what happened with S&P 500 and Bitcoin after the Fed stopped hiking interest rates. And we will watch also for our day traders, where is Bitcoin heading? Are we moving to the downside or to the upside? So let us start here with the Fed right now, because here you see it, Fed declines to hike but points to rates staying higher for longer. And one of the biggest points is one more hike before the end of the year and fewer cuts than previously indicated next year. This is what they're saying. So right now, what is important to watch? In 41 days, we will have the next Fed meeting. At the moment, the probability is at 66% that they will not increase the interest rates. But what happened historically? Historically, you see it here right now, very clearly what happened historically, and usually history repeats or is at least similar. And so what we see here, the orange line, is the Fed interest rates. You see, as soon as they paused the interest rates, we saw some more pump of the Bitcoin price. You see the Bitcoin here price topped out, and right after, as soon as the Fed start to decline the interest rate, so you see the orange line, we saw also Bitcoin followed, and we saw the we saw the S&P 500 dumping also. Why I say always Bitcoin also dump? Because S&P 500 and Bitcoin are strongly connected with each other. So if we see S&P 500 dumping, we see usually also Bitcoin dumping. It will never happen that we see huge dump in the S&P 500 but a huge pump in Bitcoin, for the moment at least. So we see historically it's in my opinion very clear. Also, if we are watching here in 2008, when we had also here the Fed start to pause the interest rates, where you see it here very clear. Wait a minute, here you see they started to pause the interest rates. So what happened? You see here S&P 500 start to topping out, and right after, as soon as usually it's very bullish, they start to decline the interest rates. We saw the S&P 500 start also to dump. You see this? Crazy, right? So usually, and this is the trap which a lot of people following, they think as soon as the Fed start to decline the interest rates, yes, this is so bullish, we are right now, we'll go to the moon. No, if they start to decline the interest rates, this is the moment where you should either sell your coins or you should dollar cost average. I would suggest dollar cost average into your favorite altcoins or Bitcoin, because then we see a dump happen in the whole market, in the stock market and the crypto market. So usually when we know we are starting again to be very bullish is when the Fed is coming to an end of declining the interest rates. You see it here. As soon as they start to, as they ended to decline the interest rates, you see it here, boom, we saw a huge pump in the S&P 500, and so does Bitcoin. So again, a quick summary historically. As soon as they pause the interest rates, we should see another pump happen. So we should see in the next days and weeks some more pump happen. And what speaks also for further pump is what Jerome Powell also said yesterday. Along with the rate projections, the Fed also sharply revised up its economic growth expectation for this year, with gross domestic product, so GDP, now expected to rise 2.1% this year. So this is highly bullish. And this speaks, like I said to you, historically, as soon as they stop to hike the interest rates, we see the S&P 500 starts to topping out. And also the projection that the GDP will rise by 2.1% also speaks for that we should see some little bit more pump in the market. But be careful, as soon as we see that they will decline the interest rates, this is the moment when we know, okay, we can start to short the market, because usually we see huge dump happen. This is the moment where everybody is hyped and, oh, we will see huge pump, but this is the moment where we'll see a huge dump in the market. So be prepared for this. And right now, what is important for us day traders right now to watch is that we should watch out for the daily support line I mean the daily 20 moving average. We shouldn't break it to the downside. In case we are breaking 26,500, I expecting that we will go to 25k, and if we are breaking the monthly 100 moving average, obviously the next big price target is the CME gap at 21k. But as far as I see it right now, and as long as we are above the 20 moving average, I still expecting that Bitcoin could run further to at least our price target at 29k. Why 29k? Because at 29k we have a huge volume coming in 29k, and in case we are breaking 29k, I expecting that we will run to around 40k, right? But the big price target is still 29k. What I expecting that we will see Bitcoin rising, and we see also at 29k we don't see only huge volume, but we see also a lot of resistance coming at 29k. So for now we don't have a lot of resistance here. There's not a lot of volume coming in, but until 29k this is a possible long opportunity of 7% right now, bratans. So what do you think about it? Write me down below, bratans. I still in my RB long position, which is still $5,000 in a loss, but as I told you, I still expecting a pump in the market. Write me down below, what do you think? $1,000 bonus you get on Bybit. If you put $100 in, you can long or short Bitcoin, Ethereum, Aave. What do you want? If you want, link is in the description or the first pinned comment. Thank you everyone for watching. I kiss you and I see you later.